Hello and good afternoon. Holly Shields here reporting to you live from 𝐊𝐿𝐴N Studio in Sydney, where it's lunchtime, which means it's time for the mid-market pulse. In today's show, we'll be having a look at the overall Australian share market performance by the mid-session trade, and then exploring the biggest winners and losers of the day, including names like News Corp, AGL Energy, Reliance Worldwide, St. Barbara, 𝐧𝐞, and others. Then lastly, in our final segment, we'll wrap it up with a focus on the stocks that grabbed headlines today. So without further ado, let's get started. Well, the Aussie share market was in an upbeat mood today, surging over 1% on firm global cues and strong economic data. The market sentiment was boosted by Chinese property developer Evergrande's partial debt payment, which eased fears of a potential default. The strong rally in the US stocks in the overnight trade, as well as improvements in the private sector activity back home, also lifted sentiment. Adding to it, investors also reacted positively to the outcome of the Federal Reserve's meeting, in which the US Central Bank hinted at beginning bond tapering. Fed boss Jerome Powell told reporters in a post-statement press conference that a gradual tapering could begin as early as November and could be concluded by mid-2022. Powell also revealed that half of the Fed's policymakers think they'll hike interest rates next year. And the benchmark index was trading 1.16% higher by lunchtime. The index barely the day in the positive terrain, tracking positive cues from Wall Street, as the US stocks finished higher yesterday after the Federal Reserve signaled the tapering of its stimulus would be coming around soon. Plus, an easing of concerns around Evergrande also lifted sentiment. The Dow Jones and Nasdaq Composite jumped 1% each, while the S&P 500 rose 0.95% similarly. Back home, investors cheered September Purchasing Managers Index data, which showed recovery chances for the Australian economy. The latest HS Market Flash PMI data showed that private sector activity improved marginally in September over prior months, despite fragile business conditions due to the extension of COVID-19 restrictions. The Flash Australia Composite Output Index hit 46 points this month, the highest reading in 3 months, and an improvement, only 43.3 points achieved in August. That being said, however, the measure remains below the 50-point mark that divides contraction from expansion. Well, moving on now to the sectoral front, 10 of the 11 indices were trading in the green zone, barring healthcare, of course. The IT sector was the best performer with a 2.8% gain, followed by a 2.3% rise in the energy sector. Among others, utilities, telecom, financials, consumer discretionary as well also surged over 1%, while consumer staples, materials and A-REITs also traded firmly with decent gains. On the COVID front, New South Wales reported just over 1,000 new local coronavirus cases and 6 deaths in the past 24 hours. Victoria, on the other hand, continued to see a surge in case tally, with daily infections rising to 766. This is basically the highest single-day tally ever recorded in the state. Moving on to our next segment, let's focus on the top gainers and losers by the mid-session trade. Well, on the winners' side, the ASX pack was media firm News Corp, which jumped a very solid 8.3% on stock buyback plans. Some of the other notable gainers were automotive equipment provider Bapcor, travel services provider Corporate Travel Management, energy stocks AGL Energy, and payment solutions company 𝐊𝐴𝐴. On the flip side though, plumbing products business Reliance Worldwide topped the losers chart by falling a heavy 2%. Other notable losers were gold miner St. Barbara, mining firm Ramelius Resources, toll road operator Transurban, and gold producer Northern Star Resources. With that said, let's move on to the stocks that grabbed headlines today, starting with News Corp, which jumped a very handsome 8% by lunchtime after it announced a $1 billion stock buyback. The share repurchase program includes the company's Nasdaq-listed Class A common stocks and Class B common stocks. They clarified that no ASX-listed CHESS depository interest will be repurchased in this program. Now with that said, it's time now for a short break, but stay tuned because I'll be right back on 𝐊𝐶𝐴 TV. Tune in to stay updated while on the move.
We will tell you where the crypto craze has reached,
Where the property market is headed next.
what the world is doing to become more environmentally friendly.
Apart from tracking the daily market charter.
Be on top of the latest news and announcements
With 𝐊𝐶𝐴 TV. Hello and welcome back. Now to discuss the rest of the mid-market commentary, let's have a look now at Australia-based retail fashion chain Premier Investments, who saw its share price surging 3% after reporting robust earnings. The apparel retailer's net profit after tax nearly doubled to $271.8 million, while revenue rose 16.8% as compared to the prior year. The specialty fashion retailer reported strong growth in top and bottom line growth despite closures of the stores due to lockdowns across the country. The company has also announced a fully franked final dividend of 46 cents a share, taking this dividend to 80 cents per share, up 14.3% from the prior year. And meanwhile, shares of investment firm Washington H. Soul Pattinson traded 4% higher after releasing their annual earnings report. The company's regular profit after tax jumped 93%, driven by strong contributions from Brickworks, New Hope and Round Oak Minerals. These companies own interest in Washington, although statutory profit dropped 71% as compared to the prior year. The decline in this profit was mainly due to a large one-off accounting gain of $1.05 billion in 2020, after the company de-recognized TPG as an associate following its merger with Vodafone. The company will also pay a fully franked final dividend of 36 cents a share, for which the record date will be the 22nd of November later this year. And moving on, shares of building products manufacturer Brickworks rose over 2% after it clocked record profits in financial year ending June 30. The underlying net profit after tax rose 95% from the previous fiscal, while the statutory net profit dipped 20% for the year, which included a large one-off profit in relation to the company's investment in Washington H. Pattinson. Underlying EBITDA from the continuing operations was up 61%, as the board of the company also declared a fully franked final dividend of 40 cents a share, which is an increase of 1%. The record date for the final dividend will be the 3rd of November later this year, with payment on the 24th. Next up now, Transurban, one of the world's leading toll road operators, saw its shares dropping nearly 2%. The company informed its shareholders this morning that it had raised $2.9 billion of its planned $3.97 billion in new capital funds to Westconnex acquisition. The company raised capital via an institutional entitlement offer by issuing 223 million new securities. These securities are to be issued as part of the institutional entitlement offer, and they'll be allotted on the 1st of October, and trading is expected to commence on the same day. The retail component of the entitlement offer will open on the 27th of September, so just next week. And moving on, Youfoodz Holdings, one of Australia's fastest growing consumer food brands, has provided an update about its new custom-built facility project. Youfoodz has signed an agreement for the lease with Logos Property Group for the construction and lease of a new production facility at Barinba in Queensland. The new facility will combine Youfoodz' 3 existing production sites together with its marketing, administration and distribution locations into one custom-built facility. And meanwhile, software firm �identityl has inked a master technology agreement plus a 3-year license agreement with Standard Chartered Australia. Following the announcement, the share price of the company jumped a whopping 17%. As per the agreement, Standard Chartered will license �identity's new software ASA service program, initially in Australia. And lastly, construction-ready lithium developer Core Lithium has signed a mining services agreement with Lucas Total Contract Solutions. The scope of the work covers the construction and mining of the Grants open pit mine, including clear and grub, topsoil management, pads, roads, dumps, dams, bunds and water controls, and open pit mining. The project is located near Darwin in the Northern Territory, and the mining contract represents another major step on Core's path towards commencing construction at the Finniss project in 2021. Well, that's a wrap on the show right now, but keep watching 𝐊𝐚𝐥𝐤𝐴 TV for more trading market updates from Australia and around the world. Holly Shields signing off.